Welcome back, Think Scripters. Alright, so what happened today? Well, exactly what I thought was going to happen. It kept on falling. Okay, now the rest of the market looked like it had a little bit of uptime. Looks like even Oracle had some uptime. But now let's just see if anything that is and has to do with Bitcoin had a bad day. Let's see what kind of a day Mara had. Okay. How about Palantir? How'd they do? Ooh. Okay. Workhorse. There's Workhorse's true evaluation. There we go. We're finally on the bottom. Okay. At least the bottom of this round. So we're getting a buy signal below 25%, which is about what we look for. If the buy signal is above 25%, it's in, this kind of a range here. And then, of course, if it's above, say, 75%, then we can be looking for a reversal very, very soon. As we can see, it came up and hit nearly 96% and forced a reversal. Now we're all the way back down here. We've come down to 2.92%, and let's hope we get to see a reversal from here. But as I suspected, Workhorse fell to. Of course, you can go back months and months in my videos and see where I gave my evaluation of Workhorse and where their true value was. I'm sure it's somewhere around where it's at now. Given the fact that we had this huge, gap here. Okay. You come and check out these gaps on the daily. Okay. This is where everyone bought in at. Most of the people who have it, they've got it here. Okay. Now, when it started coming up, let's just say insiders. All right. Let's just call this institutions, and let's call this smart retail and, everybody else. And up here, new traders. So, or, maybe some shorts here. Okay. Maybe some short sellers. Now, of course, this looks like every other chart out there in the world. Let's see, on the daily. What else can we use? All right. Let's move our mark down. We'll bring it to this gap here. Okay. Let's zoom out. Oh no. This is the same pattern that Tesla put out, and it continued to fall. So it really, really sucks. But for all you workhorse people, get out. You know, if you're holding in between here and this is you, get the F out, because you're about to have a bad time. All right. I mean, I'd love to see it just ride on up to here and then boom, bounce, but it doesn't look like that's what's going to happen. You know, this is a lower shoulder. So even if we get the handle, then the extension afterwards, we'll still end up with the breakout down. Okay. But let's just say if this is this, 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 this. Okay, so there might be one more move in there that I'm missing. Okay, let's count back. Let's go 1, 2, 3, 4, 5, 6. And you go 1, 2, 3, 4. Across 1, across 4. Okay. Now, had we done that, or, you know, started from, say, the first change in direction, 1, 2, 3, 4, struck it across, then we would have had our 5th move, okay, and we should know that our 6th move is going to come all the way down to here, and if it breaks through this, that's a problem. All right. And it seems to be the healthiest way to take this signal is one blank bar and then an arrow bar. So if there's a blank bar and an arrow bar, that's a good signal. Although it doesn't always happen. But I've noticed that when you see it, it's pretty reliable. But I'm still figuring out a way to decipher, you know, all of this stuff. At least this particular batch of indicator. We need to get this tied in with the rest of our algorithm. Although it seems to work pretty well. And it looks like trading 50 shares of Workhorse from 7.6 to 3.8 would have made us $5,000. Okay, now let's just say it's $13 a share, so 1,300, 100. So let's just say, I mean, maybe we want to trade with 150, 200, 300, 400 shares. So let's go back and we'll do, let's go back and do 500 shares. Now that it's at $13. See what that P&L says. Okay, now we're at $50,000. That's a little better. Okay. That's an income we can live off of. Now let's go up here. Change our range to Renko. Last 30 days. Let's go last 90 days. Let's keep it on 25 ticks and see what happens. Okay. Now our P&L is $319,000. How you like that? All right. But you would have to have the account to play those moves. Cash account or trading account bigger than margin 25,000, so you'd have to have 7,500 or so 6,500 or so of your own cash. And then they'll margin you 25 grand, and then you're above PDT rule and you're good to go. Okay. All right, so Workhorse did not get their contract. So the hype is gone. And they can try to go, hey, that's not right. I contest. But, there's not much you can really do about it. I mean, if Workhorse shows that they've got the facility, the product, the manufacturing, I mean, something just clearly was not right there that they didn't get picked. Whereas Oshkosh, every giant truck you see going down the road with those big, goofy-looking plows on the front of them, plowing snow, that's an Oshkosh. Most of the time. So they've got the manufacturing and, things like that, and distribution, and, all of that stuff's in place. And we all knew Workhorse is not something that you buy and hold. Not long term. We were hoping that the contract would go through and it would go up in value. It's not exactly what happened. And I'm not particularly interested in buying any Workhorse stock. I mean, maybe I was at one point, but I mean, the hype is gone there. But it doesn't have to be a hype play. It can be a genuine good play. And it looks like you could have found a genuine good play anywhere in the market today. Chances are I probably would have went for Oracle. ORCL. Now I had shares of Oracle at 63. Okay. And we made our money on it. Now let's back up some. Alright, so I must have been in somewhere in this, part before it hit this top, started to come back down. And then I just kind of left it alone to kind of do its thing. But now that it's at 70, 71.69, TPO's a bit extended. There's a gap fill right down here at 67.73. There's a bottom at 67.40. So let's expect to bounce to this bottom here, even though where this line strikes is the middle. So it still could come all the way back down to the $62, $63 range. And if it does, it's a great buy. You buy that up. Anytime Oracle dips, you buy it up. Anytime. And we can see, just like everything else, I mean, look right here. We had our jump from, our 60s to our 65s, and then from our 65s to our 70s. And you can see that's just how it likes to move. Okay. So now it'll probably fizzle itself out, fizzle itself down to a nice middle ground again, wherever that happens to be. And then, of course, the real middle ground's right down here on the 1 hour chart. So here's the middle ground down to 63.46, right where I said it would be on the other chart. All right. And then we'll look for a bounce again. So we're way overextended. They'll probably short it all the way down to here. Then you'll get to see some more of your action. As you can see, it's already starting its reversal. And that's because the peoples know. We know how it acts. Oracle took a dump here. All right. And, let's go look on that 5-year max. That even with that 5-year max, way back here, $37, okay? Oracle will continue to go up year over year over, value. Oracle is, kind of like the real Palantir. Which, that's probably about the best way to explain it. Oracle is the real, Palantir. Or Palantir is trying to do things that Oracle is. Maybe not in the same way, but they both handle data. Although it's odd, Zoom took over all of Oracle's, conference call stuff.